Good day everyone, I am Rajan Iyakaat and in behalf of Team Kabogera, I present to you our presentation wherein we will discuss auditing and internal control. This chapter provides an introduction to ID auditing. It defines the various types of audits that business commission. The chapter differentiates between the traditional attestation responsibility of the auditor and the emerging field of advisory services. It then explains the structure of an IT audit, including the relationship between management assertions, audit objectives, control tests, and substantive tests. The chapter also covers the key elements of the COSO control framework, which defines internal controls in both manual and IT environments. The chapter concludes with an examination of audit issues and implications related to Sarbanes-Oxley legislation, as well as a conceptual framework that connects general controls, application controls, and financial data integrity. This framework serves as a model for the rest of the text. Here are the following learning objectives. So at the end of this presentation, you are expected to first to know the difference between attest services and advisory services and be able to explain the relationship between the two. Second is to understand the structure of an audit and have a firm grasp of the conceptual elements of the audit process. Third is to understand internal control categories presented in the COSO framework. Be familiar with the key features of Section 302 and 404 of the Sarbanes-Oxley Act. And lastly is to understand the relationship between general controls, application controls, and financial data integrity. So here is the topic outline. First is we will discuss overview of auditing, the role of the Audit Committee, financial audit components, audit risk, the IT audit, internal control, and the internal control objectives, principles, and models. So those are the topics under auditing and internal control in which the team will try to discuss and elaborate for you. So I hope at the end of this presentation, you are able to achieve the objectives to test your level of understanding of the topics as well as to know if we, the reporters, have done our part. First off, we have the overview of auditing. So there are different types of audit that business organizations use for different purposes. And the most common types of audits shall be discussed, namely external or financial audits, internal audits, and fraud audits. So let's start with external or financial audits. As defined, it is an independent attestation performed by an expert, the auditor, who expresses an opinion regarding the presentation of financial statements. So this task is usually called a test service. The service or type of audit is performed by CPAs who are working in public accounting firms and that they are independent of their clients being audited. So the audit objective is always associated with assuring the fair presentation of financial statements. Thus, it is referred to as financial audits. So the CPA's role is actually similar in concept to a judge who collects and evaluates evidence and renders an opinion. So it is also similar naman, diba, with the concept of a judge, just like an external auditor that he or she is not affiliated with their clients. In line with that, the judge cannot advocate of either party in the trial and should draw out an opinion based on evidences. Same thing as well with an independent auditor. So evidences will be collected and evaluated, and then the opinion to be rendered shall be based on that evidence. To simply put it, the key concept in performing financial audits is independence. The auditor shall not be affiliated with his or her clients or companies being audited. So in this way, bias will be avoided and that the opinion to be rendered is based on the evidences. So independence must be maintained all throughout the audit process. Next is we have the federal law, which is called the Sarbanes-Oxley Act of 2002 or simply SOX Act of 2002. So this law, together with Financial Accounting Standards Board or FASB and the ICPA, must be strictly followed in performing financial audits as defined by the SEC. The SOX Act of 2002 is a law the U.S. Congress passed to help protect investors from fraudulent financial reporting by corporations. It mandated strict reforms to existing securities regulations and imposed new penalties on lawbreakers. So we have here the Enron Corporation Scandal. So are you familiar with it, or have you heard this one in the news? If not, then let me tell you about this one. So to start, Enron Corporation was considered as one of a new breed of American companies that participated in a variety of ventures related to energy. It bought and sold gas and oil futures, built oil refineries and power plants, and became one of the world's largest pulp and paper, gas, electricity, and communication companies. Enron Corporation filed bankruptcy in 2001, but years before it happened, the government had deregulated the oil and gas industry to allow more competition. So the regulation means that there is a reduction or elimination of government power or regulations in a particular industry. So it is usually enacted to create more competition within the industry. But then the regulation made it easier for companies to act fraudulently. This action has taken advantage by Enron Corporation. The misdeeds and crimes committed by Enron's officers and employees were numerous and ongoing. Particularly heinous misrepresentations resulted in inflated earnings reports for shareholders, many of whom suffered major losses when the company failed. Many other instances of dishonesty and fraud occurred, including embezzlement of corporate funds by Enron executives and illegal energy market manipulations. This major scandal involving Enron Company showed the American public and its congressional representatives that new compliance standards for public accounting and auditing were desperately needed. That's why this act, SOX Act of 2002, was enacted in response to a series of corporate accounting scandals that occurred between 2000 and 2002. This act, enacted as a result of widespread fraud at Enron and other companies, established new standards for public accounting firms, corporate management, and corporate boards of directors. So basically, dahil sa ang daming scandals na nangyari between 2000 and 2002 by Enron Corporation, hindi lang Enron Corporation, marami pang iba, di ba sis? There were series of scandals happened in 2000 and 2002. Kaya gipush through talaga nila na maipasa tong SOX Act of 2002 in response of that series of scandals happened in 2000 and 2002. So that was SOX Act of 2002. Let's proceed with attest service versus advisory services. There is an importance for us to differentiate or to point out their important distinction. Attest service is the external auditor's traditional attestation service, and we have the rapidly growing field of advisory services which many public accounting firms offer. So attest service is an engagement in which a practitioner is engaged to issue or does issue a written communication that expresses a conclusion about the reliability of a written assertion that is the responsibility of another party. In other words, an attest service is a CPA's independent review of a company's financial statements. The CPA issues an attestation report that includes conclusions about the data's reliability. So here are the following requirements applied to attestation services. First is attestation services requires written assertions and practitioner's written report. Second, attestation services require the formal establishment of measurement criteria or their description in the presentation. And lastly, the levels of service in attestation engagements are limited to examination, review, and application of agreed upon procedures. So on the other hand, advisory services are professional services offered by public accounting firms to improve their client organization's operational efficiency and effectiveness. The domain of advisory services is intentionally unbounded so that it does not inhibit the growth of future services that are currently unforeseen. So moreover, advisory services according to ICPA are those in which the practitioner develops findings, conclusions, and recommendations for client consideration and decision making. Examples of advisory services includes actuarial advice, business advice, fraud investigation services, information system design and implementation, and internal control assessments for compliance with SOX Act. After the passage of SOX, it greatly restricts the types of non-audit services that auditors may render audit clients. It is now unlawful for a registered public accounting firm that is currently providing attest services for a client to provide the following services. So, here are the services na bawal na i-provide ng CPA if yung pinoprovide niya na services currently is attest services. So, we have bookkeeping, appraisal or valuation services, actuarial services, internal audit outsourcing services, management functions, investment banking services, legal services and expert services unrelated to the audit, and any other services that the board determines is impermissible. The next common type of audit is internal audits. So according to IIA or Institute of Internal Auditors, an internal audit is an independent appraisal function established within an organization to examine and evaluate its activities as a service to the organization. Internal auditors perform a wide range of activities on behalf of the organization. It includes conducting financial audits, examining an operation's compliance with organizational policies, reviewing the organization's compliance with legal obligations, evaluating operational efficiency, and detecting and pursuing fraud within the firm. So internal audits are typically carried out by auditors employed by the organization, but this task may be outsourced to other organizations. Outsourcing means hiring a party outside the company to perform services that were traditionally performed in-house by the company's own employees. Moreover, internal auditors self-impose independence in order to perform their duties effectively, but they also represent the organization's interests. The standards, guidance, and certification of internal audits are primarily governed by the Institute of Internal Auditors or IIA. We have here its logo on the upper right corner, and to a lesser or lower degree by the Information System Audit and Control Association or ISACA. Next is let's differentiate external auditors and internal auditors. When we speak of external auditors, it represents the outsiders, which includes stockholders, creditors, government agencies, and the public, while internal auditors represent the interests of the organization. Nevertheless, internal auditors often cooperate with and assist external auditors in performing aspects of financial audits. This cooperation is done to achieve audit efficiency and reduce audit fees. So like for instance, a team of internal auditors can perform tests of computer controls under the supervision of one external auditor. In line with that, internal and external audit are complementary functions within the assurance framework, and both are essential for the effective governance of an organization. And lastly, we have fraud audits. Unfortunately, fraud audits have increased its popularity as a corporate governance tool. They have risen to prominence as a result of the corporate environment in which they operate, in which both employee theft of assets and major financial frauds by management have become rampant, just like the case of Enron Corporation that I have mentioned earlier. So the objective of a fraud audit is to investigate anomalies and gather evidence of fraud that may lead to criminal conviction. Sometimes fraud audits are initiated by corporate management who suspect employee fraud. Alternatively, if asset theft or financial fraud is suspected, the board of directors may hire fraud auditors to investigate their own executives. Organizations that have been victims of fraud typically work with specialized fraud audits of public accounting firms or with companies that specialize in forensic accounting. So typically, fraud auditors have earned the Certified Fraud Examiner or CFE certification, which is governed by the Association of Certified Fraud Examiners or ACFE. So we have here its logo on the lower right corner.
Hello everyone, my name is Charlemagne Pisibunga and I will be continuing the discussion for today. So let's start with the role of the Audit Committee. But first, what is an Audit Committee? An Audit Committee is formed when the Board of Directors of publicly traded companies form a subcommittee. That subcommittee is also known as the Audit Committee, meaning that an Audit Committee is a subset of the Board of Directors. Now, an audit committee usually consists of 3 people and should be outsiders, meaning that they are not associated with the management or any member of the reporting entity. And at least one member is a financial expert. Now, this rule is in accordance with the Sarbanes-Oxley Act of 2002. When we say financial expert, these are individuals who understands the technical aspect of accounting and reporting, and financial experts are usually essential in financial entities. Now, we mentioned the Sarbanes-Oxley Act. This act, this is a federal act passed in 2002 to improve the auditing and public disclosure. This is an address to the issues in the early 2000s. Just a brief recap of the history of the Sarbanes-Oxley Act. Now, let's proceed to the main point of this topic, which is the role of the Audit Committee. So, the Audit Committee serves as an independent check and balance for the internal audit function and a liaison to external auditors. When we say check and balance, this means the segregation of duties to avoid absolute power. Now, why do we need to segregate duties? It is because if one personnel is in charge of the different functions, it may lead to fraudulent accounting practices and conflict of interest. Meaning, for example, a a cashier officer should not be allowed to sign um, purchasing transactions, as well as the purchasing officer should not be authorized to release funds. Now, before the Sarbanes-Oxley Act, external auditors are hired and fired by the management. Now, with this act, the external auditors report to the audit committee, who hire and fire auditors as well as resolve dispute. Next role of the audit committee is that it must be willing to challenge the internal auditors as well as management. So since the function of the audit committee is to assess the internal and the external audit function, so it it also serves as the sounding board for the employees who observes fraudulent activities. So parang nagiging chismosa na rin tong audit committee because they address to the concerns of the employees. So what better way to assess the internal control system than to actually get the data from the workers, the employees. Next is to look for ways to identify risk. So the role of audit committee is also related to risk management. Now, let's proceed with the next topic. Let us proceed with the financial audit components. It is said that external users of financial statements are presumed to rely on the auditor's opinion, which is in the form of a formal written report, which is the product of the attestation function. Contained in the written report is the express opinion of the auditor whether the financial statements conform with the generally accepted accounting principle. Now, with such trust from the um, external users on the part of the auditor's competence, professionalism, integrity, and independence, an auditor must conform with the financial audit components, such as the auditing standards. Now, auditing standards are divided into three classes, which are the following: the general qualification standards, the field work standards, and the reporting standards. Now, sometimes the GAAS or the generally accepted auditing standards is not sufficient. In such cases, where there is a need of specific guidance, the AICP or the American Institute of Certified Public Accountants issue the Statement of Auditing Standards, which is an authoritative interpretation of the generally accepted accounting standards and provide auditors with guidance on a spectrum of topics, including methods of investigating new clients, procedures for collecting information, and such. And also, it is regarded as an authoritative pronouncement. Why authoritative? Because it must be followed. As shown, these are the 10 generally accepted auditing standards designated in the respective classes. Now, these standards will help guide the auditors in their professional responsibility. So we have the general qualification standards, which has the following. First is the auditor must have adequate technical training and proficiency. Next is the auditor must have independence of mental attitude. And third, the auditor must exercise due professional care in the performance of the audit and the preparation of the report. So I will not be reading to you the rest of the generally accepted auditing standards in the respective classes, but this table is actually present in the PDF file sent in the Google class. Next is a systematic process. So conducting an audit is a systematic and logical process that applies to all forms of information system. Now, in today's time wherein most activities are computer generated, a systematic process is particularly important in the IT environment because since there is a lack of physical procedures, it possesses a high degree of complexity into the IT audit. Because in physical procedures, we can visually verify and evaluate those processes that are producing errors. Wherein dito sa information technology environment, we need to have a logical framework in order for us to assess which part of that process are producing errors. Because since it is already programmed or generated, so a wrong programming will produce the same erroneous results, erroneous data results. So thus, a logical framework is needed, especially in an IT environment. Next is management assertions and audit objectives. Now, why do we need assertions? It is because the main goal of the auditor is to assess whether the financial statements are fairly represented. Now, the organization's financial statements reflects a set of management assertions about the financial health of the entity. These assertions fall into 5 categories. So the first one is the existence or occurrence assertion. Now, what does this assertion signify? So it affirms the existence of all assets and equities in the balance sheet and the occurrence of all transactions in the income statement. Now, next assertion is the completeness assertion. Now, this declares that no material assets, equities, or transactions have been omitted from the financial statements. Next is the rights and obligations assertion. Now, maintains that assets appearing on the balance sheet are owned by the entity and the liabilities reported are obligations. Next is the valuation or allocation assertion. Now, assets and equities are valued in accordance with GAAP and allocated amounts are calculated on a systematic and rational basis. And lastly, the presentation and disclosure assertion. This signifies that correct classification of items in the financial statements and the footnote disclosure are adequate. Now, as shown, these are the audit objectives and audit procedures based on management assertions. So we have management assertions, which are the existence of recurrence, completeness, rights and obligation, valuation or allocation, then presentation and disclosure, and we have the audit objective and audit procedure. Again, I will not be reading to you this table, but this is present actually in the PDF file. Now let's proceed with the audit procedure. Now your audit procedure could actually be based from the pertaining assertions, so which could be those in relation to transactions and account balances that directly impact financial reporting, or audit procedures that pertains to the information system itself. Next is of course, obtaining evidence. So evidence is needed to support our claims. So in the IT environment, this process involves gathering evidence relating to the reliability of computer controls as well as the contents of databases that have been processed by computer programs. So, kagaya lang din sa research, di ba we have this part dito sa research wherein we need to test the reliability of the instrument. So, kagaya lang din dito sa auditing in an IT environment wherein kailangan din natin i-test if the internal control system is reliable and is measuring what it is supposed to measure. So, further substantive tests could be done in order to assert whether the internal control system is functioning properly and is obtaining the entity's objectives. Now, ascertaining materiality. So after we did some substantive test to our internal control system, we will assess whether those misstatements or those weaknesses found in the internal control system are material enough to affect the final output. But in an audit environment, assessing materiality is an auditor judgment. So in an IT environment, however, this decision is complicated further by technology and a sophisticated control structure. Next is communicating the results. Of course, your assertions or attestation would be pointless if you will not communicate your results to the intended users. Now, the audit report contains, among other things, an audit opinion. So this audit opinion is actually the findings of the auditor in the financial statements of the client. Now, this opinion is distributed along with the financial report to interested parties, both internal and external to the organization. IT auditors often communicate their findings to internal and external auditors who can then integrate these findings with the non-IT aspect of the audit. So that's the end of my part. Thank you for listening.
Good day everyone. So for this presentation, we will be tackling about the audit risk and the IT audit. So before anything else, allow me to introduce myself. I am Saifa Amirol Benito, 21 years of age, and I am currently staying here at my hometown, which is Malabang, Lanao del Sur. So for the topic outline of this presentation, for the audit risk, we will be tackling about the inherent control and detection risk, as well as the audit risk model and the relationship between the test of controls and substantive test. As for the IT audit, we will be tackling about its structure. So, starting with the audit risk. So what is this audit risk? So audit risk is the risk that an auditor expresses an inappropriate opinion on the financial statement. So ang ibig sabihin nun, audit risk, ito yung probability na yung auditor will render unqualified opinions sa financial statements that are materially misstated. So when you say material misstatements, ito pwede siyang mag-cause ng either errors or irregularities or pwedeng both din. So when you say error, ito yung mga unintentional mistakes ng auditors. Ang irregularities on the other hand is opposite. Ito naman yung mga intentional misrepresentations na pwedeng committed with fraud such as misappropriation ng physical assets ng isang company or deception of financial statement users. So you are deceiving the users of the financial statements that you are providing. So ang main objective ng auditor is to achieve the level of audit risk na acceptable sa mga auditors. So ang acceptable audit risk is estimated based on the ex-ante value ng components ng audit risk model. So ano tong mga components? Those are the inherent, control, and the detection risk. So starting with the inherent risk, when you say inherent risk, it is the risk that is associated with the unique characteristics of the business or industry of the client. So it arises due to the error or omission as a result of factors other than the failure of controls. So ang inherent risk, always remember na yung mga businesses or firms that are in declining industries, they have higher level or greater inherent risk compared dun sa mga businesses or firms that are in stable or thriving industries or yung mga businesses that are in developing industries. So katulad din sa mga industries na may heavy volume of cash transactions, mas greater yung or higher level yung inherent risk nila compared dun sa mga industries that do not. For example, yung valuation ng isang diamond, so it is inherently more risky compared doon sa pag-assess ng value ng isang automobile tires or ng isang shoes or ng isang bag. So yung auditor, hindi nila ma-reduce yung level ng inherent risk. Kasi nga, kahit yung system that is protected by excellent controls, kahit ganun pa siya kaprotektado, the financial data or the financial statement itself will be really materially misstated. So next, as for the control risk, it is the likelihood that the control structure is flawed because controls are either absent or inadequate to prevent or detect errors in the accounts. So, para mas maintindihan natin yung control risk, let us cite an example. So, for example, sa sales of record. So, for example, ang quantity or ang dami ng sales is 10 units. And then, ang unit price is $20. So, it means, in every unit is tag $20. So, the total would be $200 since 10 units multiplied by 20 unit price. At $20 na unit price, that would be a total of $200. But then, ang na-enter mo is hindi $200 kasi $2,000. So, the extended value of the total is an error. So, pag yung AIS mo or the accounting information system mo is meron siyang adequate control, is madedetect niya or mapaprevent niya yung ganung mga errors. But what if yung errors are lacking? So, ang mangyayari, yung errors na mga ganun will not be validated before processing. So, ang mangyayari, yung mga undetected errors that is entering your file will increase or mas dadami. So, ang mangyayari doon, dapat the auditor should assess the control risk by doing a test of internal control. So, doon sa example natin kanina, yung auditors, pwede siyang mag-create ng test transactions wherein kasali na dun yung mga incorrect total values or mga errors. Then yun, mapaprocess yun by the application in the test run. Then yung result ng test, yun yung mag-indicate ng mga price extension or yung mga value that is not being detected or is being incorrectly posted or incorrectly entered doon sa accounts receivable file. So, ganon yung nangyayari sa control risk. As for the last component, which is the detection risk, so detection risk is the risk that auditors are willing to take that errors not detected or prevented by the control structure will also not be detected by the auditor. Ang ibig sabihin nun, etong detection risk, eto yung risk that an auditor failed to detect a material misstatement sa financial statement. So, di ba, hindi siya na-detect ng control and then the auditor also failed to detect the errors. Yun yung detection risk. Ang nangyayari kasi, yung mga auditors, nagsiset yan sila ng acceptable level ng detection risk or ito yung tinatawag natin na planned detection risk. So, siniset nila yung planned detection risk kasi yun yung ginagamit nila to influence the level of the substantive testing na gagawin nila or iperperform nila. So, for example, mas maraming substantive test ang gagawin nila or is required for them to perform if yung planned detection risk is 10% than when it is 20%. So, ganun yung sa detection risk. So, tapos na tayo sa 3 components of audit risk model. So, ano nga ba itong audit risk model? So, when you say audit risk model, it is used to determine the scope, the nature, and the timing of substantive test. So, meron tayong formula sa audit risk model. That would be audit risk is equal to inherent risk multiplied by control risk times the detection risk. Now, to further understand this audit risk model, let us assume an example. So, we have the formula, audit risk is equal to the inherent risk multiplied by the control risk and then multiplied by the detection risk. So, let us assume that the acceptable audit risk is assessed at 5%. And let's also assume by illustration that the inherent risk is assessed at 40% and then the control risk is assessed at 60%. Now, what is asked in this problem is what is the level of detection risk or the planned detection risk in order to achieve the 5% acceptable audit risk. So, we do that by substituting the given. So, for our audit risk, that is 5% or 0.05 is equal to the inherent risk of 40% or 0.40 multiplied by the control risk of 60% or that would be 0.60 multiplied by the detection risk. So, since yung detection risk yung kailangan natin, that would be detection risk is equal to, first, let's multiply 0.40 multiplied by 0.60, that would be a total of 0.24. So, that would be detection risk is equal to 0.05 multiplied by 0.24, that would be a total detection risk of 0.20 or, in other words, the level of detection risk or the planned detection risk needed in this example to achieve the 5% acceptable audit risk would be 20%. Now, for the next example, let us assume that the control risk is assessed lower at 40%. So, same formula or same flow. Let us substitute the following given. So, ang papalitan lang natin is yung 0.60 rather, gagawin natin 0.40. So, 0.40 multiplied by 0.40, that would be 0.16. So, that would be detection risk is equal to 0.05 divided by 0.16. So, that would be a total detection risk of 0.31 or the planned detection risk is 31%. So, as you can notice, sa example 1 and 2, sa example 1, para ma-achieve yung acceptable level of audit risk, is si auditor is kailangan niyang mag-set ng planned detection risk lower than the example 2. Since sa example 1, 20%, then sa example 2, 31%. So, ano yung maaring dahilan nito? So, this is because yung internal control structure ng example 1 is more risky compared dun sa example 2. Kasi nga, as you can see, sa example 1, 60% yung control risk, while sa example 2 is 40% lang ang control risk. Kaya, mas lower yung detection risk ng first example kaysa sa second example. So, para ma-achieve ni auditor yung acceptable audit risk sa example 1, kailangan niya ng mas maraming substantive testing sa example 1 compared sa example 2. Kasi nga, again, the risk is lower at example 2 kasi only 40% ang controlled risk compared doon sa example 1 of 60%. So, to further discuss this relationship, let's discuss it on the next slide. So, proceeding on the relationship between the test of control and substantive test. So, test of controls and substantive tests are auditing techniques used for reducing the audit risk to an acceptable level. So, the stronger the internal control structure as determined through the test of controls, the lower the control risk and less substantive testing the auditor must do. So, the relationship is true because the likelihood of errors in an accounting records is reduced when controls are strong. So, this means na yung test of control and substantive tests, they are both techniques na ginagamit para i-lower yung audit risk to an acceptable level. So, ang nangyayari dito, pag yung internal control structure mo is strong, which is determined by the test of control, then yung control risk mo is lower, and that means lesser din yung mapaperform mong substantive testing. So, ang relationship na to is true kasi nga, yung likelihood ng errors naman is marireduce kapag yung control mo is strong. So, in easier words, if your controls are in place and strong, then you will have lower control risk and fewer substantive testing. So, kabaliktaran naman, if your controls are weak, then you will have greater control risk and more substantive tests na i-perform. So, to sum up, always remember that if your internal control structure is strong, then you will have lower control risk probability, and that will eventually lead you to lower or fewer substantive testing. Kasi alam naman natin lahat that substantive tests are labor-intensive and are very time-consuming. That will only lead us to have more audit cost, or will only drive up our audit cost. So it is best for management to have strong internal control structure. So that is the relationship between the test of control and the substantive tests. So finally, proceeding to my last topic, which is the IT audit. So, yung public expression ng opinion ng auditor is yun na yung culmination ng system of financial audit process that involves three conceptual phases. Those are the audit planning phase, the test of control, and the substantive testing. So, I will be discussing those phases later. So, an IT audit focuses on the computer-based aspect ng organization's information system. And yung modern system employs significant levels of technology. So, for example, yung mga transaction processing natin is automated and performed in large part by computer programs na. So, yung similarly, yung mga source document natin, yung mga journals, yung mga ledgers that are traditionally paper-based, ngayon digitized na. Kasi ngayon, high-tech na lahat. So, these data are stored in relational databases. So, as we will see later, itong controls na to over these processes and database becomes the central issue sa financial audit processes. Kasi nga, sa process na to or sa system na to, which is, it is all digitized, hindi talaga maiiwasan yung material misstatements. So, finally, the structure of an IT audit, or ito yung phases of IT audit. So, as I've said a while ago, we have three phases: the audit planning phase, the test of control phase, and lastly, the substantive testing phase. So, starting with the audit planning phase. So, dito, is ang first na gagawin is to review the organization's policies, practices, and structure. Kasi nga yung auditor is malalaman niya kung ano yung test na i-perform niya by understanding the business of its client. So, yun nga, kailangan nyo munang i-review yung mga policies, practices, and structures para malaman niya talaga kung ano ba talaga yung business ng client niya. After that, i-review niya din yung general controls and application controls ng business ng client niya. And there goes the planning of the test of controls and substantive testing procedures. So, dito na phase niya na yun, ipaplan. So, the next phase will be the application. So, kapag naplano niya na, so dito first is the test of control phase. So, dito niya ipo-perform yung test of controls and then i-evaluate niya yung result ng test na yon and determine the degree of reliance on controls. So, dun sa example natin kanina, di ba, the internal control structure can be either strong or weak depending on the result ng test of control. So, kapag after the test of control, ang result is strong, ang controls ng business niya, so that means lower yung control risk niya. So, ang ibig sabihin din nun, lower than or lesser or fewer yung magagawa niyang substantive testing. So, dito, madidetermine niya kung ano yung substantive test na magagawa niya. Is it more or is it fewer? So, kabaliktaran naman, kapag weak naman yung controls ng business, yun yung lumabas sa result, then that means yung control risk niya is higher and that means mas kailangan niya ng maraming substantive testing. So, kapag maraming substantive testing, mas lalaki yung audit cost. So, lastly is the third phase or the substantive testing phase. So, since alam sa test of control, malalaman niya na kung few ba or more ang gagawin niyang substantive testing. Dito, ang first na gagawin sa phase na ito is to perform this substantive test. And then, after performing, i-evaluate niya yung result and yung mga issues sa audit report niya. And finally is the audit report on the financial statement. So, dito kasi sa phase na ito, it involves a detailed investigation ng mga specific account balances and transactions that are called the substantive test. So, for example, is yung customer confirmation. So, yung customer confirmation kasi is sometimes ginagamit siya to verify account balances. So, ang nangyayari, yung auditor is magsiselect sila ng sample accounts receivable sa balances and ititrace nila yung source non or the customer para ma-determine yung amount stated is in fact owed by the bona fide customer. So, by doing so, yung auditor is ma-verify niya na yung accuracy ng each account in the sample. So, based dun sa sample findings, yung auditor is makakadraw na siya ng conclusion about the fair value ng entire account receivable asset. So, yung substantive test, minsan physical siya, like physical siya or labor intensive, such as yung pagka-count ng cash, counting inventory sa warehouse, or pag-verify ng existence ng stock certificate in a safe. So, yung IT environment, yung data is kailangan niyang ma-perform yung mga data needed to perform substantive tests that are contained in data files that are often must be extracted using the CAATTs or the computer-assisted audit tools and techniques. So for the next reporters, we will be able to examine the roles of the CAATTs in performing traditional substantive tests and other data analysis and reporting tasks. So, that would be all for my presentation. Thank you so much everyone for listening. Again, this is Saifa Benito and see you on my next discussion.